Thank you everyone for joining and welcome to our Earn While You Sleep event, Passive Investing in Real Estate. We hope you enjoy this replay. Again, welcome tonight. And I don't know that all of you know me, but I'm Andrea Peart-Williams. And the reason I host the Earn While You Sleep is to help bring together top real estate experts to showcase the best passive investment opportunities, and so that you can truly earn while you sleep. My goal is to connect you with trusted professionals who you can find that will help you build your wealth, just as I have, through proven high quality investments. And I've been in the industry for over 17 years, investing in real estate, and I've helped coach individuals, consult them to help build wealth that can last them for generations and not just for today. My mission is to empower all my clients and anyone that does business with me to teach them how to invest wisely today so that they can secure a prosperous future for tomorrow. These are experts that I myself have invested with, and I'm so blessed that I've had huge success, and I just want to share that with everyone. I've invested with Austin at Equiton with my registered funds, Lyra, RSPs for my husband, and even open and cash accounts, as well as I've invested with Brendan in Toronto, building in the Laurel Ridge Fund. I've done multiple projects there that we are successful, so if you want to see any of those, please reach out and join us. We're happy to give you a tour. I mean, they're right here in the GTA for many of you who are locally here. If you're not local, don't worry. We can still spend time with you on a Zoom call and go through how that could be a very lucrative investment for you. I've also invested in the Dominican Republic with Noel, and I'm pleased to say that everything that we've done there thus far has been very successful. And so I know that these are solid investments that I'm bringing to you tonight. And I've also got someone who wants to share their success story of how they've gotten started investing already with one of these providers. So here is our client success story tonight, Kelly, who I met 2 years ago, and I was so proud of her to say, because she's a very young, in her 20s, and really wanted to get started in real estate. So she is one of my coaching clients. And I said to her, Kelly, I know that the best way that you're going to get started investing in real estate is to collaborate with your mom. And so guess what? 2 years later, Kelly is doing that. And I didn't even meet Kelly in person. We actually met virtually. She was referred to me by another coaching client of mine. And I'm so blessed to say that she now has established an investment with her mom, and she's going to tell you that story.
Good day, everyone. I've invested in W2Q along with my mother. It is an amazing unit in the Dominican Republic with a gorgeous ocean view. W2Q has a team of seasoned investors behind them. They have an amazing vision, and on top of that, it's a substantial return on investment for us, and it was simply a no-brainer. We're simply looking forward to 2026 and what's ahead with W2Q.
Thank you, Kelly, for that. And here now are our three experts. Austin Rogers, who's with Equiton, Brendan Callender, who's with Laurel Ridge Fund, and Noel Walrond, who's speaking to the W2Q beachfront condos. And these are three experts. They're going to tell you a little bit about who they are and their expertise and knowledge in the industry, as well as the product that they wish to share with you tonight. And I know that you're going to find great information in this.
In new permanent residents by the end of 2026. And that's important because it ends up working out to like almost 500,000 people a year that the country wants to bring in. And the truth is, I want to show you a few slides that's going to show you that demand for real estate is far outpacing supply. And I think we all know this, but I want to show you the severity of what that really looks like. And we're in an interesting environment right now because finally, after many, many years, interest rates are coming down. For anyone who's trying to get into real estate, for anyone who's in real estate, this is a sigh of relief because it's going to make affordability a bit better on the monthly payments, but also it will spur a little bit of activity back into the real estate market. And that's why when you look at how the market is performing as a whole, it's very likely that we're going to continue to see interest rate cuts for the rest of this year and more than likely into 2025 as well. And because of that, there's going to be some really interesting opportunities to be getting involved in real estate and some opportunities that can give you some pretty consistent growth without taking on a huge amount of risk. And the one part that I think is really, really important is housing development. Because there's been so many headlines over the last 1 to 2 years about how housing development is like the worst investment vehicle in Canada at the moment. And it's really just a lot of, I would say, buzzword headlines around the downtown Toronto market, because that's where it's saturated with a lot of 500 square foot condos that were built for investors that just aren't selling anymore. And that's true. There's a lot of supply out there that doesn't really match what us as the end users are looking for in terms of what we want to live in. And I think that there's going to be a shift in the development of new supply that's going to start to shift back to end users. This is a big change that needs to happen, because if you go look at some of the downtown Toronto condo market, it's just flooded with even some bachelor units that are as small as 300 square feet. That's barely a hotel. And I think that that's where a lot of these headlines will come around, where you hear about housing development not be great. But look, the truth is, with a growing population, with interest rates coming down, it's not like there's a lack of demand. It's just that the demand is there for the right type of housing. And so you got to make sure that if you're looking at investing into a real estate development, you're investing into projects that are built for end users. You're investing in projects that are in great neighborhoods. You're investing in projects that are near transit, highways. Some of these overarching topics I think are very important, but it ensures that the investment you want to get involved with has the ability to get to completion. And so there's even a few things the CMHC has done recently. CMHC has come out now and said first-time home buyers can do a 30-year amortization instead of 25. For anyone who's not familiar with what that means, it means that you can reduce the monthly payment when you're qualifying for a mortgage. And it's important because that's what people need to be able to buy a home. It's not usually the purchase price, it's what's the monthly cost. And can you afford the monthly cost based on your income? And it's important because right now, some of these changes are going to make it easier for Canadians to get into the market. And they brought up a second change where they're allowing insured mortgages, which is where you put down less than 20% down payment, up to $1.5 million on purchase price. And all of these new initiatives by the government are going to kick in December. So you've got a rising population, you've got interest rates cutting, you've got government initiatives. There's very likely going to be a big demand coming back to the residential market over the next few months, maybe the next few years. And so it's important to note that the buyers aren't gone. They're just waiting for the right opportunity to get back into the market. And I think we're at the beginning of seeing that start to turn around. And this is why I want to give you some ideas of why investing in real estate now can be a very strategic move amid what's happening in the market today. So here's a slide. It doesn't seem to be populating the chart here as clean as it needs to be, but honestly, all you need to see is the bars on the chart there. You see the orange bar? That's population, and more so immigration and population growth. Now, why that's important is because for about 10 years, Canada averaged around 400,000 people immigrating into the country. And then in 2022 and 2023, it went through the roof. It jumped up to 1.1 million people in 2022 and 1.25 million people in 2023. But more importantly, do you see the bar beside the orange bar, the little blue one there? That's the amount of housing that we have completed on an annual basis. So when you hear about this housing supply issue and you don't really know how to put your finger on it in terms of what that really means, look at this chart, because it's showing you that none of us here need to be a mathematician to figure out why we have a housing issue right now. It really just comes down to supply and demand, that kind of cliche term you hear all the time. But when you're bringing in 2.3 million people in 2 years, but Canada is only building 400,000 homes in that time frame, That's a problem. And that is a serious problem that needs to be addressed by building new housing at a faster rate that is built for end users who really want to live there. And that's one of the things that we actually really heavily focus on here at Equiton is building townhomes and building condos. And one of our recent townhome developments, we're building them with an average square footage of 1,000 square feet. We're not building these little micro condos that nobody really wants to live in. And so I think that this is an important chart to look at when you talk about housing demand in Canada. Yeah, this is why we have a problem with housing demand in Canada. The balance is very, very far off in terms of what we're building versus the amount of people that we're bringing into the country every single year. And so there's an interesting thing. I'm not sure how many of you are familiar with the CMHC, but CMHC is essentially just the Canadian Mortgage and Housing Corporation. They give you a sense of where the market's at on an annual basis, on a quarterly basis. And they brought out some funny stats because the CMHC is the one bringing out these initiatives to make home buying easier, raising the amortizations and increasing the purchase amount. But then they came out with a study, and it says that they think the condo market's going to be slow in 2024, which made sense. Then they say that interest rates are going to get cut in 2025 and home prices and sales will likely recover, which makes sense. But then they're coming in here and saying that 2026 means that because of the low rates and the low supply, it's going to push home prices past previous highs. So you've got the CMHC who's out here trying to help Canadians and protect Canadians and get them into the right assets, basically telling you that, hey, with everything happening, prices are probably going to go above where they were before. So good luck to you. Even though we're doing all these initiatives and trying to make it easier, it's just going to continue to get worse in terms of affordability. And that's why when you look at investing into a development today that might not come to completion until 2026, 2027, those are going to be coming to completion in a very, very good real estate market. Now, here's an interesting one. Don't worry too much about the graph. You see the dotted lines? The dotted lines on that graph is when interest rates were finally at their bottom of a cutting cycle. So today we're in a cutting cycle because the government is now cutting interest rates. And when they stop cutting interest rates, that's going to be another dotted line. And if any one of you want to have a look at that chart and see what happens every single time that they have done an interest rate cutting cycle, home prices have gone up quite substantially. Now, there's always that cliche line of history may not repeat itself, and maybe that'll be the case this time as well, but I'm not betting against that. And when you look at charts like this, it gives you a pretty fair indication that with everything going on, the CMHC, the interest rates getting cut, there's a very good likelihood that 5 years from now, real estate prices are likely going to be under some severe pressure, and more than likely, they could be much higher than they are today. And it's just something to keep in mind because this isn't Equiton stats. This isn't my stats. I pull all of this from CMHC. I pull it from the Canada website. We find these stats that I think are very useful for people trying to make informed decisions about why to invest in real estate. So a few key notes here, because we've already gone through about 13, 14 minutes of the presentation. And I want you to know there's a few key takeaways and a few really good slides that you can keep in your back pocket. And it comes down to new home completions. If we're only building 200,000 homes a year, how are we supposed to keep up with the rate of population growth? And recently, the governments came out and said they're going to try and curb a bit of inflation, but that's a target. And their target for 2022 was 500,000, and they came in at 1.1 million. So let's see how well they do with maintaining their target for immigration and what the effect of that is going to be on the demand for new housing. And number two, today's lack of new starts. And what I mean by that is because interest rates were so high the last few years, a lot of developers couldn't complete their projects. A lot of developers pulled out of their projects. And so when you look at that 200,000 housing completion, we're actually on track this year to only build about 175,000 homes, which is below the 10-year average. And that's not good, because if we're declining with new homes, but we're still bringing in a lot of people to the country and demand is coming back because of the lower rates, you're going to see that this lack of supply is going to result in a very tight condo market for good end user product, stuff that people really want to live in. And finally, when you see those higher new home prices, they tend to follow those lower rates. I'm a person that likes to make sure I'm going with the market and following the trends. And so I wanted to really show you a few of those charts that I thought would be conclusive on helping a few people understand where the market might go over the next few years. So when I bring it to Equiton and you want to understand a bit about our company, I just want to give you an idea of who we are as a company. And I just want to throw up a few exciting milestones. So we're not a startup. We're not just entering the space. In terms of those three different offerings that we have in terms of investing, these are some examples of what we're doing. Back in June, in our apartment fund, we bought a $70 million complex of properties out in Welland, the Niagara region. That was huge for us because it was a record-breaking purchase. And in August, our apartment fund, which is Canadian-owned, Canadian-operated, surpassed $1 billion of assets that we manage, which means if any one of you were investing into our apartment fund, you'd actually get to be part owner of a diversified billion-dollar apartment portfolio, and that's where your returns would be generated from. And then after breaking a record in June with a $70 million acquisition, in September, we bought $130 million worth of properties in Toronto, located in North York and Forest Hill. And then finally, in September, I'm really happy to say that Equiton has been in business for 8.5 years. And in 8.5 years, which is 100 months, we have never seen a negative return. That is 100 months of consecutive positive returns being generated from all of those apartment buildings in our portfolio. This is one of those strategies that you can actually use inside of your RSPs and TFSAs to be able to get more real estate without having to worry about being the landlord. And I think there's a really nice takeaway here. And I want you to know that Equiton as a company is not just solely focused on investing. I actually encourage any one of you to check out the Equiton website because we're a thought leader in the real estate space. We do a ton of content around the different real estate market news. And so in fact, this is really interesting. I'm not sure if any of you know the Concordia University or the John Molson School of Business, but recently we partnered with them and some of the professors there have helped us to create some white papers around rent growth in Canada over the next 10 years and what that might look like. And we're using AI models to help us understand what these trends are really going to look like. But it's just to say that Equiton as a company offers really solid investments. We have great track records, but we're also an amazing source for anyone who just wants to learn about real estate. And I think that's one of the key takeaways I wanted everyone to get from this presentation today was that there's a lot of content out there. It's hard to digest it. We put together a lot of these pieces into easy to understand PDFs and one-pagers. So if you want to learn about real estate, you want to understand what's happening with the market, highly suggest you check out your site because you'll find some interesting info in that study that we did, which is if you look at a 2-bedroom apartment in Toronto right now, the average rent is about $3,250 a month. It's anticipated that by 2027, it could be as high as $4,100 a month. And that's an absurd increase, but it's going to be heavily driven by those trends we showed around interest rate cuts, population growth, and really the lack of new housing that we're building across the province of Ontario and Toronto. And so with my last minute left to make sure I can give all the speakers their time, it's just to bring it back to this slide. And the reason I want to end here is because when you think about Equiton and what we do, it's really focused on learning. It's really focused on getting more of an understanding around the real estate market. And when you look at the three different options here, I just encourage, if it's something that you want to learn about, you want to learn about how to passively get involved with real estate, Equiton's a great company to connect with to understand more about our offerings, understand about real estate, get involved with an option like you see on the left side, which is our apartment fund, which targets that 8 to 12%. And it's a very consistent return that also provides monthly cash flow. But then on the very right, we've got those development offerings where we build townhomes, we build condos, and you can go for those higher targeted returns as long as you've got the time frame that matches that type of objective. And so, Andrea, with exactly 20 minutes on the dot, I will pass it back over to you, and I'm happy to answer any questions someone might have about the real estate market or Equiton as a whole. and we'll come to the Q&A towards, I believe, the end of the presentation. And I'll pass it back to you, Andrea, so we can get the next speaker to share some insights as well. So thank you for giving me the opportunity. You're still muted, Andrea.
Thank you. Sorry, thank you for reminding me too. I muted just because I had a couple things dinging outside, but I apologize. I do think you do a fantastic job of just helping us understand and educating us, and I love the knowledge that you provided with respect to real estate. I really think that helps people understand what they need to do and why, right? The only question I saw in the chat that I thought you might be able to answer quickly, Austin, is this available to individuals in the US?
It is not available to individuals in the US. The US is an interesting one. We actually can sell to anybody in the world, just not the US as of yet. So eventually that will become a thing. And I did see one on one from Andrea. Minimum investment starts at $10,000 to get involved with our company. So a $10,000 minimum to get started with real estate investing. Hope that helps, and sorry for taking another question.
No, that's okay. I think it's better that we answer them now because they're directed to you. But if you do have additional questions for Austin, we will absolutely give you a chance to ask at the end. It'll probably be closer to 8:20, just to give the other speakers a chance to speak. Okay. So let's move on to our next speaker is Brendan Callender. And so Brendan, did you have a presentation that you want to share?
Of course.
Okay. So then.
Hi, everyone.
Sorry?
I said hi, everyone.
Okay. Yes, Laura, go ahead. I don't even know if I'm sharing anymore because I am so not good with technology, but I love that everyone else is following nicely suit. So thank you, Austin. Thank you, Brendan. I'm ready for you.
Thank you. I'm just going to
yeah, you should be able to share. Yeah,
to share it. Yeah.
Sharing privileges.
Can everyone see that?
Yes.
Awesome.
You can see Brendan has started. Yes, there you go.
Awesome. Thank you, Andrea, and thank you all for taking time to want to better your life and make your money work for you on this Thursday night. I am Brendan Callender. I am a partner at Laurel Ridge Fund. We are a fund that builds multifamily.
Hello, my name is Dr. Caroline Power, and I'm one of your clients.
Sorry.
Very well, thanks. Oh, sorry, I thought you said how I was.
I think we have
I just muted.
Oh, okay.
I don't even know how it happened. Sorry, Brendan, go ahead.
That's okay, no problem. Yeah, so I'm a managing partner at Laurel Ridge Fund. We are a multi-family home builder in the GTA. And I think our story, our origination is quite an interesting story of how I always tell people never say no to a meeting because you never know where a meeting will take you. And that kind of starts where my story, how we started as a company. About 4 years ago, I was doing construction financing for a builder by the name of Kevin Sharp. And Kevin was building multifamily homes, just type duplexes and triplexes in Ottawa. And a mortgage broker came to me asking me to finance the project. I financed the project. And a lot of mortgage brokers, they kind of take their check and you don't see them again. And Kevin, the builder at the time, was reaching out to me and speaking to me about getting his advances, what's the next steps. And we financed the project. In 8 months, he finishes the project. And most builds you hear about usually take about a year to year and a half to build a property. And the speed this guy worked at, my partners or I were quite surprised by how fast he made the project move along. So we took it as an opportunity to say, hey, you know what, let's meet, because not a lot of builders act like this or deliver in such a tight time frame. And we came to a point where we're like, we want to do more projects for you because you're moving fast and you're not wasting time. As a lot of people say, time is money, right? In financing Kevin through these projects, he's doing 3 or 4 a year. I'm starting to talk to him about scaling and how he wants to do more projects. And for my previous background, I was consulting for a company, a fund called Bellows that ran about $800 million of private mortgages in the Toronto and Ottawa region. And the fund manager who had hired me as a consultant had left that firm and was looking for a new opportunity. So I kind of said to Kevin, I go, I think I might have a guy that can help you scale your business. And let's look at starting a fund for you to help you do more projects. And putting everyone together, Sam, who was previously at a company that ran 800 million, putting Kevin together, and everyone coming together, we created a Laurel Ridge Fund. Why we're unique in the sense of, yes, we build multifamily homes, but most companies you'll see, most partners all have like the same background. And our backgrounds are all very diverse. Me coming from the finance world of financing projects, Sam being a fund manager and running, different funds from JP Morgan, working at JP Morgan, having an Ivy League background at being at Cornell. And then you add a builder and Kevin, and you really look at it, you kind of have the trifecta of how you would want to run a fund. You have someone who specializes in construction, and that's what they do well. Myself, I focus on financing, which is whether it be the mortgages, running the numbers for the project, and Sam, who runs the fund. So here we are as Laurel Ridge, and we have now this is our first fund, but over the last 5 years, Kevin has built over 16 projects in the GTA and Ottawa region. So let's get into kind of like how this is kind of just a little background of how we got here, and how we've kind of grown through the years of Kevin's evolution. And again, he started back in 2012, just building small multiplexes in the Ottawa region till he moved to Ottawa in 2017, till 2022 being in the GTA area. And now in 2024, we are launching our Laurel Ridge Fund, where we're building multifamily homes. So let's talk a little bit about like what exactly we do as a multifamily home builder. Are we building like 10 plexes, 20 plexes, 100-unit buildings? That's not what we do. What we are doing is we're taking that small housing stock that you see maybe on Lawrence Avenue, or a small housing stock that you see in Scarborough, where you're just looking at these smaller bungalows on large lots. Maybe they have a carport, maybe they're a half back split, maybe they have no basement. We're buying those homes and knocking them down and building by right. And what's important to be building by right is you're de-risking your development. Most developments will take 3 to 7 years. You don't know exactly what's going on with the development because it takes time to go through the city, go through municipalities to get approvals for these builds. And for us, we look at it as some of these housing stocks will never be developed into multiple units or homes because they're in a subdivisional area. Those people do not want you to build an apartment building across the street from their house. So by building by right, we're building 4 units in the home. And in August of 2023, the provincial government came out with the law or the rule to the municipalities that if you get on board of increasing density by allowing your municipalities to have 4 units in it, there will be incentives coming from the provincial government. The city of Toronto jumped on that. And for us, that was a great opportunity that we saw that we could start building 4 units in these properties. By building it by right, we also had the ability to also add a laneway suite to these properties because, as you knew, about 4 or 5 years ago, the city of Toronto started talking about allowing people to change garages and do laneway suites, or what some will call garden suites. So we saw that and looked at it, and okay, that gives you 5 units on a single family home lot. And there's no one who can really stop you because you're building by right. By building by right, we now had 5 units. in December of 2022, Austin spoke about CMHC. CMHC had a program where they came out with the MLI Select program. And the CMHC MLI Select program is a 5 units or more program where a borrower can qualify for a mortgage on the cash flow of that building. So now we're able to now provide people who want to invest in Toronto real estate by not having to qualify for the mortgage on their income. Everyone talks about buy condos, buy houses, go to Niagara, go to Edmonton, go to Alberta. But the problem with all those conversations is, how do you qualify for the mortgage? Like, the amount of people that, whether you're self-employed or you got multiple properties being turned down by the banks because you have hit the capacity of amount of doors, is not a good feeling. And it actually throws you off, because now your cost of borrowing for that investment property goes up. And currently what's happening in the market in condos, you're seeing it right now. It's people are going out of their pockets to pay for their condos or pay for their homes because the rates have gone up so much, and it just doesn't math anymore. So by us building what we're building, we've now provided an investment vehicle for investors to buy properties that does not qualify based on their income. It's purely based on cash flow. So the CMHC program it offers now client borrowers in that program that we build to the specifications of the program. It allows a buyer to now qualify for a 40 to a 50-year amortization on that mortgage, and rates based on bonds, not the prime rate. And historically, the bonds have always performed below the prime rate historically. And in a time like this, where rates have been so high, the bond rates have been significantly lower. So for example, some of our clients that have qualified for mortgages in the last 4 to 5 months on our projects, their rates are as low as 3.9%, 3.85% loan to 3.58 interest rate. So when you're talking now, everyone's at 5-6%. These clients are qualifying for a 3.80 interest rate with a 40 to 50 year amortization. These properties are cash flowing at over $2,000. So what do these look like? They look like these. So what we build is, for the most part, when you look at it, it's on the same lot beside a regular residential home with a laneway suite. And recently, the Toronto municipality came out with the air rights where you can go up to 3 stories. So we're now, starting in January of 2025, we will start building these properties 3 stories with 4 units that have 2 bedrooms, 2 baths, and have a laneway suite that is 2 floors, that is generating $3,000 in income per unit for $15,000 a month in gross income. So the average unit that we build is 958 square feet. So they're not your boxes in the sky that nobody wants to live in. These are almost 1,000 square feet, 958 square feet, with 2 bedrooms, 2 baths, with 9.5 foot ceilings. So you're not feeling like you're in a small, pinched condo or a basement unit where your head can touch the ceiling. So as of recently, these are some of our products that we've sold in the last 6 months. And what's important for a lot of people to understand in this market, when you're starting to do with multifamily, again, I talked about cash flow. When you're buying these, people buy these based on the cap rate. And as you know, rates were really high in February and March of this year. We were selling these units with a 4.5 to 4.6 cap rate on our properties. And we believe that over the next 5 years, as our fund starts to build out those 3-story building houses that we have in our pipeline, we believe we're going to be able to sell these properties at a 4.7% cap rate. which means now when we're selling these for anywhere between 2.8 to 2.9 million, we will now be able to sell these properties for 3.1 million. So we target our acquisitions again to the housing stock that is an older housing stock, which is the Scarborough area, Toronto, Etobicoke, which is where we're right now predominantly building in North York and East York. Again, some people will ask us, how come we're not going to Mississauga, Brampton, Oshawa? Unfortunately, those municipalities haven't gotten on board with the provincial government's mandate to put in 4 units in the property. And some of those municipalities haven't even gone on board with the garden suite. So we've predominantly focused on the GTA because of the build by right. Building by right reduces the risk of development pushback from the city or any neighbors. So just to give you an idea, like as you can see from these properties, they look like a house for the most part. They're not a bunch of back steps going back in the back of the property. The neighbors don't give us any problems because it looks like a house. And again, right now we're achieving rents of about $3,000 a month for these 2-bedroom, 2-bath units. So the question will be is like, what kind of return are you going to get on our fund? So our target return is a net IRR of 21%. How are we able to achieve a 21% IRR to our investors? Is because it's a equity fund, but we're financing the debt at a very reasonable rate, and because we're able to build by right and build quickly, that generates a larger return for our investors because you're not losing time of development charges, you're not losing time trying to fight the city, you're not going all the challenges that typical development would go through. So you as an investor in the Laurel Ridge Fund, you're participating as an equity partner. So as we sell these units, we're redistributing the profits to the investors. So this is just a base case of what an investment would look like in the Laurel Ridge Fund. And when I was building the fund, one of the things like coming from Caribbean parents who didn't invest in these types of opportunities, I took all those factors into talking with my business partners. And one of the biggest things that people have an issue with in investing in these things is they don't know what happens when they put their money in. Most development funds, they'll tell you it's a 5 to 7 year development fund, and we'll talk to you in 5 to 7 years. You'll get your notices, you'll get your updates, but you really don't know what's going on in your fund or in your investment. You know, a lot of people got caught with Fortress. That happened with Fortress. Like, you invested in Fortress and look what happened. You had no idea what was going on. And for me, I wanted to create a fund that had a lot of liquidity for investors. I wanted to be able to feel confident in telling someone, if you invest this money and you're not seeing returns, you need to call me because there's a problem. And we basically set it up where we're only, let's say you were to invest $250,000 in the fund. In the first year, we would only call roughly $118,000 of the $250,000. You'll be like, why, Brendan? Why is that? Well, we're not going to take your money if we're not going to put it to use. And the way we've structured this fund is that we want to have time periods between each build so that our teams can roll over to the next project. And at the same time, as we finish a project, sell that project. So of $250,000, you would invest $118,000. By year 2, you would invest another $98,000. However, by year 2, we would have been already sold a project or 2, which means you would get a distribution for that sale of that project. So really, you're only putting out $45,000 of your own income because we would have given you a distribution of $53,000. And then by year 3, you would be getting, we would call down another $10,000 and you'd be getting a distribution of $96,000. So really, of the $250,000 that you would commit, By the end of year 2, you only would have put out $164,000, but I wouldn't be calling any more money from you. Why? Because the remaining years of this fund, we're putting back out the capital and we're putting back out the distribution. So really a $250,000 commitment is really only $164,000 capital commitment. So I know some people are gonna have some questions about that, and I'm happy to answer them at the end, but think about the liquidity that you've made, that we provided for you. You're seeing returns, you're seeing them roll off the assembly line, and you're getting returns, and you're putting the returns back out without having to put out your own capital. I'm not sure how I'm doing for time. How am I doing okay for time right now?
Yeah, you've got maybe another minute, and so yeah, go ahead.
Actually, I'll leave it there, but I'm happy to, we're one of the few funds that I'm excited to show people my projects, and because we really believe in what we're building. And anybody who's an investor has to understand that the idea of these condominium buildings is not the dream of the 500,000 immigrants that come into Canada. And we need to have a different housing stock for the older homes that are in this GTA area. And that's what we're solving for. I don't knock condos, I don't knock the multi-home, the home builders, but that is not necessarily the dream of every Canadian that wants, every immigrant that comes there. They're looking for, safety, opportunity, avoid from a political or religious oppression, and just to be in a safe, nice housing environment. That's not a box. And if you look at the rest of the world, they raise families in flats, but the flats aren't 500 square feet. So what we're building is really for those people, and for generational homes that can house 4 or 5 families and provide that for them. I thank you for your time, Andrea. I wish any of you want to come see multiple projects, contact me. I will happily take you and walk you through all of our projects that we currently have on the market right now.
Yeah, I think more than 90% of the attendees tonight are in the Toronto, GTA area. So come out, take a look at them. We are willing to have a tour with you and show you that there's a wide range of them. Some still in the transition of being completed, not yet having the garden suite. Some have the garden suite. Some are completely finished, and so you can see it from all the different phases. And Brendan is happy to, go from one lot to the next, because they're not that far apart. A few of the projects are quite close together, so that you can get to see a range. They are awesome, homes, as you said, Brendan, for that multi-generational family that, wants to live and have family close by, because they don't have to live in each other's space. They can each have their own distinct unit. Everything separate, right? But they're there to help each other. And that's, I think a great way for people who are coming into the country, who is in the country already, to live. So it's great. Awesome. There was one question, Brendan, that you might want to take. Sure. And it's just from Kesha. She was asking, I heard that if you're a first-time buyer, you're unable to flip, that is, use it as an investment. And, how true is that?
Flip? You mean for the multifamilies? I think
I don't think it's specific to the multifamily, but Kesha, did you want to clarify? I think it's just in general. Sorry, let's see. She said, yeah, in general.
In general.
As a first-time buyer, can you buy and I guess, flip it? Like if you want to do some upgrades and fix it, lipstick, whatever, or do a whole reno and then flip it as a first-time buyer.
Yeah, you can. I know you're not supposed to, but you can, as long as it's your principal residence and you live in there for a minimum of, I believe it's a year.
It's a year.
Yeah, you're fine, but it has to be your principal residence. That's what the first-time home buyers is for. It's not for investment properties. It's for first-time home buyer being a principal residence. I do know there's people who circumvent the system and do certain things, but by The answer is yes. You're supposed to be using it for your principal residence. It can be done. You just have to. I guess you're doing a little bit of a dance.
Yeah. So I do agree with Brendan that it can be done if you're, taking it on as your principal res. But, you do that 3-4 times in a row. I think the government's going to recognize that it isn't really just, for a principal home. You're using it as a strategy to bypass and, deflect paying taxes. And then it becomes an issue. So
They will come for you.
they'll come. They always come.
Yeah, correct.
So, yeah. Awesome. Sorry, so that we don't go too much into your time, Noel. I don't want to go back to my screen, but I want to give you sharing privileges as well, Noel. So we are ready to have Noel, who again is coming to us from the Dominican Republic to share his product and how that could fit into an opportunity or an option for you. Noel?
Yeah. Well, good evening, good evening, good evening. And you're going to need to stop sharing there so I'm able to share. So he's going to have to stop sharing.
Yeah, Brendan, you'll have to stop sharing.
And,
Or can I control it? Let's see.
you can. And while Andrea is doing that,
Yeah, no, you have sharing privileges. Go ahead.
good evening, everybody. Greetings from the Dominican Republic. It's great to be here. And Andrea, thank you very much for inviting me to this. Andrea has been a fantastic business associate and partner and great friend. We've known each other since high school. And it's interesting because I know Brendan since high school as well. So it's amazing to see that everybody's growth and expanding into different areas. I've only got 20 minutes, so I really want to jump right into this. But what I want to say to you is, as I'm going through this presentation with you tonight, if there is interest in a deeper dive in learning more, we have some presentations that we're doing. If you wouldn't mind, we've got one Saturday morning at 10 a.m. and one on Monday night at 8 p.m. You can go on and register for those so we can get into this in much more depth. We were trying to make a short and condensed presentation. We had some technical issues, so I'm gonna get through as much as we can tonight, and then for those of you who want to have more interest, you can connect with me directly or register for our event. So if you could post that in the chat, so as we get going, if you like what you're hearing, click on that link and be ready to share it with family and friends. We're going in depth. So first question for you guys: how many of you have ever invested outside of Canada? If you've ever invested outside of Canada, give me a 111 in the chat. And if you've never invested outside of Canada, give me a 222 in the chat. And let's get the chat going. Let me see what's going on. So 111 if you never have, 222 pardon me, 111 if you have, 222 if you have. Okay. So good. All right. Okay, so this is going to be new for a lot of folks. Good. All right. So, well, first of all, ¿cómo estás? And ¿cómo estás usted? Mi amigos. I've been studying Spanish for 2 months in class. So I'm learning my Spanish here in the Dominican Republic, a beautiful place. But tonight we're talking about W2Q beachfront condos. It's the first 5-star in the gated community here in East Cabarete. So we're the North Coast. I'm going to show you where we are in a moment. But this is here's the big question I got to ask you, and you can let me know in the chat. Just give me a yes if your answer to my questions is yes at the end. So if I were to tell you that you could own luxury real estate for 30% cheaper than you would pay for a 3-star build, earn 20% plus per year on your investment, and own a property in a country where the government does not report your earnings, would that be of interest to you? Give me some yeses in the chat if that is you. Give me some yeses in the chat if that's you. If you think that yes, that would definitely spark my interest. If it can keep certain prying eyes out of my business. Okay, great. So let's continue. So if your answer is yes, that's great, because we have a project that fits any budget. So we have units that start as low as 161,000. All numbers are US dollars. Just to be clear, all numbers are in US. Okay. So we have units that start as low as 161,000. They go 2 bedrooms is 270, and 3 bedrooms at 605. So we can fit any budget. These are beachfront, literally beachfront on the beach, and we have flexible payment plans and financing options are available. Okay. So The now, why the Dominican Republic? So just as an example, when you compare internationally, because I was looking at international investment, I was looking at buying apartment buildings. I'm part of Grant Cardone's investment club out of Florida, and we were looking at buying apartment buildings. And he was teaching us how to underwrite deals and what to look for. Well, one of the primary things, although he doesn't do building, he buys properties with existing tenants. But if you are going to go the building route, you look at price per square foot. If you look at the price per square foot for a 1-bedroom in Miami, we're comparing beachfront to beachfront, not in the city or out in the country, beachfront to beachfront. You're looking at $480 a square foot. If you're looking at Costa Rica or Jamaica, you're looking at $350 a square foot. With that, you're looking at $288. So you're getting a discount. And one of the biggest things with real estate is you want to make money on the buy. You want to get maximum value. I've, as one, missed out on the Jamaica boom, which has happened over the last 10 years. There was a group that came into Toronto. They talked about buy Jamaica, buy Jamaica, buy Jamaica. But I was scared, like many people, because I want to invest closer to my neighborhood. I'm from Toronto, and this is the first world country. Why would I want to go invest in a developing place? Well, not realizing that you can get 2 or 3 properties for the price of one. This right here is what you call a down payment for properties in Canada. And when some people are actually walking away from properties and their down payments because they're not going to be able to close because they can't qualify, right? So for the price of what you would pay for an entire place, you get that's a down payment in other countries. And so if you're looking at the numbers are going to vary, but Canada, United States, and Europe, if you're talking beachfront or waterfront properties, you really can't beat the Dominican Republic. You just can't beat it in terms of value and price. So some of the big questions are, who's the team and when will the project be finished? Or will the project get finished? Because that's a big question. And as it was rightfully put, I think Austin had mentioned at the beginning of tonight, some projects aren't getting done. So first of all, my name is Noah Walrond. I am the managing director and partner. I'm Henry Williams Jr. He's from Atlanta. I'm from Toronto, Brampton. Henry is from Atlanta, and Luis Mata is the builder it's here that's local. And we want to make certain that we partner with somebody local, and I'll explain why in a minute. But just a little bit of my background. I started out by profession, I'm a performance coach. I teach people how to monetize their passions, beat procrastination, increase their incomes, take their businesses to the next level. Been doing that for about 12 years. I guess. And so when I first started, I needed to subsidize my income. And so a friend of mine, Sherrard McQueen, who owns M5V Developments, I started out with him. There's a place called Westside Lofts in downtown Toronto. He's teaching me how people build wealth using real estate as a vehicle, how to build intergenerational wealth. And so the long and short of it is that I started doing financial literacy presentations among my students who are in my classes, as well as friends, family, and associates. And those people bought into projects like Westside Lofts in Toronto. Those people have made a lot of money over the years. And then, of course, you've got, I've helped raise money for Dreammaker, their project right here, which is right across the street from Yorkdale Mall. I've raised $3 million for that project, and my people made money again there. And of course, and Sherrard now has got projects in Niagara Falls like this, and we've made money there. So we've made money all around, which has been great. And so, that's my background. I got my mortgage license so I can legally talk about real estate, because I'm too skinny and too cute to go to prison. So so I had to make certain that I had gotten my license. It's now been parked since now that I'm living over here, but I had the license and I'm a real estate investor. I actually cashed out of all of my real estate properties before the interest rates went up. I saw the writing on the wall and I cashed out, and people told me I was crazy. But I didn't end up losing out on 30 to 40% on my equity because of the downturn in the marketplace like this. And so now we're in a situation, and by the grace of God, I've ended up here in the DR, where the environment that we had investing in Canada 10 years ago, where there were competing offers and it was going absolutely nuts and prices were jumping, not just 10 and 15%, in some cases 30 and 40%, you know what I mean? And prices were going up overnight. You saw the lineups around apartment buildings where people were trying to buy. Remember those days? You know what I mean? Like this, right. So the environment that existed then there is now happening here. So those people who want to maybe make up the difference on what they've lost over the last 2 to 3 years and don't want to have to deal with the regulations with government, particularly with Airbnb and making cash flow and all that kind of stuff and all the government regulations and all the nonsense. The Dominican Republic, you've got a government that wants your business, that wants your money. And as a nomad capitalist says, you should go where you're treated best. Go where you're treated best. And the Dominican Republic knows how to treat its investors. So I'm not going to go heavily into into Henry's background here just in time, but our builder, this is very important. We made sure to partner with a local builder who had a great reputation. So this guy, Luis Mata, he's also on the board of tourism for Puerto Plata, which is very important to us because he's got a reputation to protect and he's also very well connected, which makes a big difference because in a lot of cases, it's not just what you know, but who you know. That makes a big difference in terms of progress that you can make. But he's been in business for 11 years as a builder. He had 2 projects that he built in Puerto Plata through, this is through COVID. And he's delivered on those, which I'll show you in a quick moment. But one of the keys is the builder is not a hired hand. He's a partner. He's also an investor in the project. He has a vested interest in the success of this project. So he doesn't get paid until you get your keys. You know what I mean? Which is very, very, very important for anybody who knows about some of the situations that people are dealing with. So these 2 projects, which were done simultaneously through COVID. This is in a development in a place called Puerto Plata. It's called Plantation. This is Build-In 42, which is this project. And so this project was done through the pandemic. And I guess everybody, it's sold out and everybody has their keys, building delivered. Like this. And this next project, this is Puertas del Mar. This is a community housing project that he built as well, completely sold out. Everybody's got their keys. He was 7 months late on delivery. For 2 projects going at the exact same time through COVID to only be 7 months late is pretty remarkable, in my opinion. And you have to, and the best time to judge people is when things aren't going well. Like this, and he's already proven himself that through the tough times that he can deliver. So that's really, really extremely important. Due diligence. One of the first things that I was taught by Sherrard, actually, when he taught me in real estate, he said that anytime you're looking to invest, go to City Hall. You want to know what the city plans are. So I went to the City Hall and I met with the urban planners for the city of Puerto Plata and Cabarete Sosua, and we were shown the city plans for the next 10 years. They showed us the road and infrastructure plans. They showed us with the building and the business. See, this was actually the maps that they showed us where the best areas are, where we can get the best bang for our buck. And on this sheet of paper, they were going through what businesses are coming in, and what expansion plans and those things are happening. That's when I made the decision, because there was a lot of hype when I got here with people buying. But I said, I don't want to buy based on hype. I want to buy based on fundamentals. And the fact that they showed me a 10-year roadmap, that gave me peace internally to know, okay, we've got good runway here and we can make some very good money. And the expectation is that in the next 10 years, we're going to be reaching Miami level prices like this in the next 10 years. So you do not want to sleep on the DR. You know what I mean? And by the way, for some of you on this call tonight, it's not a case of, do I want to take part in one or two or the other? You can take a look at all of them and diversify and mix and match your investments, you know what I mean? So that you can diversify. But part of your portfolio should be international, because when you don't always want to be subject to everything that's going on in a specific country, because as leadership changes, rules change, and situations can change. So it's good to be diversified and mix it up a little bit. So we're promoted by local brokerages. We just actually signed Remax down here as well. So they're going to be, I'm just showing this so that we've been vetted by locals, because when real estate brokerages get on board, there's legal involved, you know what I mean, like this, and they have to be very careful about who they're partnering with. And they have decided to partner with us because we passed all of their tests, the blood tests, all the COVID tests, all the tests. So now there are 3 different types of people who participate with us. We've got those who are looking for hands-off investments. You just want to get your cash flow, get equity. You want to hedge against inflation. You want to add to your investment portfolio, create generational wealth, pay for your kids' school, create your own pension, and enjoy the tax benefits of investing here in the DR. And one thing I would just say that, again, one side of it is that there's no reporting to internationals, but if you actually set up a corporation here, there are the tax rate is way cheaper, lower than it is back home like this. And so there is tremendous savings here, tremendous. It's not how much money you make, it's how much you keep that matters like this. And in the DR, you keep more of it in your pocket, bottom line like this. And we have a hybrid model for some people who may want to come down and chill out for a couple of weeks, they'll get away from winter. I haven't done winter in 3 years. You know what I mean? It's been great. I like this. And so, but some people may want to come just for a few months and then you get some cash flow when they leave, when they're out. And some of you may just want to relocate because it's expensive back in Toronto. It is expensive. It's expensive. Prices, I can't believe the numbers when I see the numbers. But it's a much lower cost of living here. This is not a third world country, it's a developing country. In fact, if you go to Santo Domingo, the capital city here, it's a cross between Toronto and Miami in Piantini. It's nice. You're seeing Porsches, Lamborghinis, all of that here in the DR. It's like, this is not a third world country, it's a developing country. But if you got kids, they got great international schools, they learn multiple languages. And, you know, and you can be earning 10 to 15% per year, like this, while you're living where you're living like this, you know, and getting to relax and chill out and enjoy paradise while you earn. So where are we located? We are, the Dominican Republic is in between Cuba and Puerto Plata. We're a 2-hour flight from Miami, about 4.5-hour flight from Toronto. Where most people, when they think of DR, they think of Punta Cana. We're actually up here on the North Coast. So right next to Cabarete, okay? And right here we are about a 25-minute drive from the airport like this, because there's four international airports in Dominican Republic. One of them is Puerto Plata Airport, which is a 25-minute drive from us, and we are a 3-minute drive from the downtown core of Cabarete. And we intentionally chose that because we don't want to be in all the noise. We like to have peace and quiet, and then when we want to get into the noise, we can go jump in. So, couple of key things: weather, hurricanes. We don't get hit with them on the North Coast too heavy at all, which is great. Like this, we'll get some. You can get some flooding, but we don't get the heavy winds because of the huge mountain ranges that we have. Petty theft at best when it comes to crime is kind of like Ocho Rios in Jamaica. For those people who are familiar with that, it's a surfer town, small town community. It's a beautiful, nice, relaxed, international people from all over the world here. And we've got 4 major beaches that are close by, and the 2 major cities. It's a $10 or $15 bus ride if you want to go to the major cities. So I know I've got 4 minutes left and counting. So let me get right into the project here. Okay. So so we are a 4-story building. All of the units are. You can from the balcony see the ocean. Ocean is over here. Like this, we are 10-foot ceiling to floor windows. And we we got the infinity pool. We've got a bar there, a restaurant that's going to be built. So it's luxury living, spectacular views, spacious layouts, and great facilities and appliances, and customization is available. Like I said, in our presentations, we'll be going into this in much more depth. I just want to make sure I give you the high level stuff. So we are 10-foot floor to ceiling windows, 1 bedroom, 1 bath. This is for the 1 bedrooms, 726 square feet. So we're not a matchbox. 1 parking space, and we've got air conditioning in all bedrooms and living rooms, and we've got appliances included as well in this, and we've got interior design that you can get for purchase. We're promoting it as a hotel, so for on the unit, so we're centrally controlling the rentals and all that stuff for you, so it's turnkey. But if you're going to come and live there, you can get your own furniture. It's up to you. You know what I mean? But if you're going to be renting out and going through that, it's a 5-star build, and we want to represent it that way, and we pass on all savings to you. 2 bedrooms are 1,200 square feet, I guess, and you get 2 parking spaces from the 3rd floor and above. And the 3 bedrooms, you get 2 parking spaces, and you've got wraparound balconies that are facing the ocean. The amenities, we got the infinity pool, the restaurant, gym, free shuttle service into town, and like this, and we've got the little grocery store, the mini mart for your convenience. The extras, we've got elevators, generators for backing up the entire building, and it's a gated community with 24/7 security. So pricing. So again, we start at we start at 161. If you see our website, and as Andrew will put that into the chat, you're getting a discount by being here. So the pricing here you're seeing is discounted pricing. So we start at 161 for the 1 bedrooms, 270 for the 2 bedrooms, and 6 and change for the 3 bedrooms. How do we compare locally? I talk about making money on the buy. Again, price per square foot, we're at 288. Other buildings in the area, 249 is the closest. We got 249 there. We got 235 here. We got 540 here. We're the best game in town. You can't get a better deal from a price wise. You can go online and check all of these listings out. No problem. It's all there for public consumption. Okay. And then of course, same thing with 2 and 3 bedrooms. We are cheaper by the square foot. I just wanted to move ahead quickly to show you a couple of things real quick. So you can earn 20% per year while we're building. And how do you justify those prices or that return? It's simple. We have the Ritz-Carlton coming in very close by, and we've got the port expansion, and we've got new luxury villas, condos, and restaurants coming in. The whole area is going through gentrification. And so what does this actually mean to you at 20% per year? At 161, it's 70 grand over 2 years. 349, it's 153 over 2 years. And we've got 291 over 3 years on the 3 bedroom. That's what we're talking about. And these are what's coming in. Pardon me, sorry. And I apologize for the speed, guys. I literally have 30 seconds left based on my 20 minutes. So this is the Ritz-Carlton that's coming in. If the Ritz is coming in, you know we're in a good position. And we've got we got new townhouses coming in, multi-million-dollar villas, other projects that have been sold out in our area. Our area is beginning to boom. So how do you get to 18 to 27% per year? Well, after the build is finished, you're going to be looking at 10 to 15% per year market value increase. So and a cash flow of between 8 to 12%. So combined income, when you combine cash flow and market value increase, you're talking 18 to 27% per year. Show me an IRA, mutual fund, RSP that can beat that. So in terms of the deposit structure, we can go into all of that, but as I told you, we have a flexible payment structure for you, and we got discounts if you come in with more. I'll just say this is the last point, that you can assign units. We have assignment clause. We don't charge for it, so you can always sell your unit anytime between purchase and the time that we close. And you can also team up with others. That's what Kelly did with her mom. They teamed up as a family to come in and purchase a unit. You don't have to do it all on your own. And the last thing I'll just say is that residency, we put you on the fast track for that. And why is that important? Now, I'm not talking about citizenship, I'm talking residency. And with residency, what happens is that you can now borrow against your property. And because you can borrow against your property, you can now you can invest, take that money and invest in other places and expand the same way we do back home. But you need to be a resident in order to do that. And once you're a property owner here, we show you how to fast track to make that happen. So with that said, I love to welcome you all to being a part of the W2Q family. Andrea, thank you. This is the fastest I've ever spoken in my life.
That's okay, Noel, because you know what? Everyone's probably just so excited on their edge of their seats. They're like, I'm going to the DR. So this is awesome. Great job. I think I've never seen you speak that fast and give so much information in such a short period of time. That's okay. We have done this before, Noel and I, earlier in the spring, and that's why you had so much interest, Noel, for you to come back here. So I think they can join your presentations. I've put the links in the chat. Go ahead.
And one last thing I'll just say, we bought the land at $910,000. 2 years later, we had it appraised at just under 1.4. So that should give you a sense of what's happening in our area.
That's right.
So come join us, DR.
Awesome. So there was a message in the chat, Noel, and I think it's coming from Caroline Power. She was just asking, how easy is it to get your money out when it's time to sell?
Okay, so I'll answer 2 questions. One, I just put my WhatsApp number in the chat. So
Sure.
Didi asked, what's your direct contact number? So hit me on WhatsApp, Didi. Just put it in and shoot me a quick message and let me know that you came from this presentation. So in terms of selling your units and getting your cash out, it really depends on the area and the region. For us, as an example, if you're looking at a 5-star build and some of the higher quality stuff, those tend to go quick. And of course, the ones that are very, very low priced stuff that people with low income would want to buy. no different than it is back home. Selling something that's a 1-bedroom and a 2-bedroom is easier than selling a 3-bedroom, you know what I mean, in many cases because of the price. But as far as this particular investment is concerned, I wouldn't recommend selling. And which is part of the reason we're showing.
Yeah, so I think, sorry, Noel, I'm thinking, and Dr. Caroline Power, you can clarify. I'm thinking she's saying, when I want to sell this property down the road, how easy is it to sell? I mean, we've worked with Coldwell Banker there. Like, we have the same sort of systems there in the DR as we do here in Canada. So
we believe,
and we work with Scotiabank.
Yes, and we believe our project will be very easy to sell because of all of the real estate brokers that we're connected with here. There's a ton of people who want that commission, and when you're at the level of what we have, the demand is very high because it's beachfront. So selling
Close to the airport, on the
because-
main,
right.
just a little bit off the main strip.
But at the same time, I recommend for folks this, to me, in my opinion, this is a buy and hold because outside of the cash flow, just that market value increase. If people, like a lot of the people on this call, like Andrea and Brandon, they've made their millions here because they didn't just sell everything right away. They held, you know, and so when you're looking at the runway that it exists here, my suggestion, I mean, you can sell, and yes, and the simple short answer is yes, you can sell it. I guess, but
And you can get your money just as you could here. It's a similar transactions with the lawyers and closing and money.
refinance and get your money. And once you, and when you have a bank account set up here, which is very easy to do with a passport and proof of a bank account back home, they make it really easy here. Like this, once you have a bank account set up here, you can decide whether you're going to be sending that money back home to Toronto or you want to send it somewhere else in the world that you really want to go. So you've got some more options.
Okay, so great. Thank you, Noel. I know that we started a few minutes after the 7 o'clock hour, and we did promise to give you a chance to ask questions. And it was fast paced tonight. And so we're asking you to ask your questions, but also we're going to end with how to contact us and how to book your one-on-one just to get more answers, to get more information, more knowledge. There's no commitment to buy. We understand each of you have very unique situations and you may not want to necessarily address that all here, but this is your chance to ask questions. Kesha, I wasn't sure what you were saying, something facts. What is it that you meant by facts in your statement in the chat?
Oh, Noel was saying something and I agreed. So I said facts, like that's right. Sorry.
Yes, we are about, I mean, part of this tonight was to help provide you with some education. We are going to share with you this replay. You're going to have access to that so that you can revisit what was said. You can write your questions down before you meet with us or meet with Noel, either Austin or Brandon or myself. And so don't feel that, you know, we're trying to rush here. We were really just trying to provide you with as much information as possible and help educate you so that you understand that you can win here at home if you are looking to do it. Maybe not an active purchase like, you know, I've done over the years because the prices are so high to enter, but you can invest in products that Austin and Brandon shared, or you can go nationally or internationally like Noel is, and also find opportunities to enter the market and more easily attainable than if you were to buy $1 million property in the GTA, which is, and especially if it's in Toronto, it's going to be pretty expensive. Not just expensive to buy, but expensive to close and expensive to manage and carry on. And I'm not sure in every case, definitely with the Laurel Ridge projects that I've invested in and I'm building and developing with Brandon, I know I'm going to cash flow. But there's so few projects in Toronto, in Brampton, in Mississauga that you can buy in cash flow. And we're not talking about entering at, you know, like Noel is showing you 161,000. That's not attainable here.
Well, and by the way, that's not, you don't have to come up with that up front because there is a payment plan.
A deposit structure.
It's broken up.
Like anything here, when you're investing and it's pre-construction, you're doing it over a period of time. So I still don't see any additional questions in the chat. But I do see, thank you for the feedback, Aina. Here are some contact details. Now, Noel put his phone number in the WhatsApp, but when you reach out to Austin, Brendan, or Noel via email, they will reach out back to you and connect with you. So I also put in, and Rochelle, you can add in the chat, the link to book me if you'd like to book a one-on-one with me. I can always have, if you say, hey, can Brendan or Noel join, or you can choose to meet with them separately. It's up to you. It's whatever feels right to you and comfortable. We're here to help make it successful for you to get the knowledge that you need and make decisions about what would make sense for you next.
Do you want people unmute to ask a question? Maybe.
Yeah, unmute. We're here. Like, we're going to sit here for a little bit and answer questions. If you still want to ask, Noel's here, Brendan's still here, and let's see. I don't know.
Keisha has a question. Keisha has a question.
Okay, Kesha, sorry, or Keisha.
Oh, Kesha.
Yep, Austin's still here. Go ahead.
Hi, guys. So, thank you for this session. I learned a lot more than I thought I actually knew.
Oh, that's awesome. Excellent.
The correct pronunciation is Keisha, yes.
Keisha. Okay. Thank you.
No worries. And I wanted to know, if you wanted to invest in a pre-construction home, you were saying that you pay for it over time. Where do you, or how do you go about getting a pre-construction house then? Or like, who do you speak to about it?
Are you talking about Dominican Republic?
I guess just anywhere in general. I don't really have a specific area because I'm a first-time investor, so.
Right.
Yeah.
I think if you're in Canada, one of the first things you want to do is go and get a pre-approval and see what you can be approved for with a mortgage specialist. And Andrea can connect you with solid people who can help you with that. If you're looking at Canada, to see what you can qualify for, and they'll assess your financial situation, and then you can move forward with that. If you're talking about the Dominican Republic, we have a deposit structure, which is broken down over the course of 2 years, and so that where you can put down deposits and do the breakdown over the course of that 2 years, and so that it makes it a little bit easier for people, so they don't have to come out of pocket as much upfront. And of course, people also too have that option whether they choose to flip in advance, sell in advance, or you can also get financing here. So once you've done the 60% of the investment into the property, the balance of 40%, you can get financed here. In the Dominican Republic, if you're buying a house that is already got title on it, for international investors, it's typically 30% down, and they look at your credit from back home, and then you get the same way that we have Scotiabank down here, so they will pre-approve you the same way an institution would back home like this, and then you can move forward with your investment. So in either case, you'd want to get pre-approved, so you want to see what you can actually qualify for, so that you're targeting specifically something that makes sense for you.
Yeah, and I think in terms of pre-construction, Brendan, did you want to maybe add to it? I think in general, for me, when I'm doing pre-construction, I want to make sure I understand who the builder is, what their history is, the experience, because I want to know that they're going to go to completion, right? Because there's no point in putting my money out there and potentially losing it. Sorry, Brendan, go ahead.
No, I think Noel gave a pretty good first steps. I would just add one thing, and I think I have a little bit of a different mindset for people. Is like, you don't necessarily always have to own property to be in the real estate business. Noel gave, Austin gave, and my own self, we gave products that you're in the real estate business without having to own the end product. Noel had 3 different ways of doing it. Austin, it was the passive investor in real estate, and same thing with mine as being the passive investor in real estate. So I just want people to always think about, you don't always have to be a homeowner to be in real estate business, because again, the qualifications here are challenging. The price of entry is challenging for a young person, but there's still opportunities here. There's still 500,000 people coming here, and those 500,000, a lot of them are coming through the golden visa, and they have lots of money to buy. So you don't necessarily have to be the end user always, but they've given you opportunities. But yes, to the original part of the question, Noel hit it pretty much dead on for the start of how to start the pre-construction process to get the mortgage. That's the most important thing.
And Brendan does provide mortgages as well. So like we agree, we all say you don't go shopping for a property, whether it's pre-construction resale, you definitely want to know what you qualify for and then you go shopping. Okay, so we can always put you in touch with first the mortgage broker or agent that can help you secure, what you qualify for, or even how to best set yourself up for qualifying, because sometimes you need to do some work before you're able to get the amount that you need to buy in or enter into the market. As well as, we can then help lead you to some great projects that are available. Any other questions?
Yes, this is Dr. Caroline Power. I have a question for Austin. Is he still on the line?
Yes.
Austin, my question is your organization offering real estate investment trusts? Is that what the investment is?
Yeah, you got it, Caroline. So they're structured as mutual fund trusts. So one keeps all the assets under one roof. And just to give some context on that, they're mutual fund trusts so that you can use registered plans. In Canada, very important that you have them set up as an MFT, just so that you can actually use these, passive registered accounts. But a very important thing with our company, our mutual fund trusts always have a independent board of directors associated to them. So anytime we're making acquisitions, changing something about the fund strategy, it needs to be unanimously approved by an independent board of directors to ensure that all transactions for our fund are in the best interest of unit holders. So just a few key points about us, but definitely a trust. So you are correct.
Okay. Is it tradable on the stock exchange? So, for example, am I able to go onto my investor line or any of my direct investing platforms and buy the units, or are the units private?
The units are private, and that's part of our strategy that we enjoy. Just because being private, we get to avoid the volatility of the public market. All of the valuations of our securities or MFTs are actually done by third-party appraisers. And for example, we use CBRE, which I would consider to be the gold standard for appraisals here in Canada. So not available through your direct investing. But if you work with a financial advisor, we actually have a ton of financial advisors who buy our product, or you can actually come to us directly to purchase the product as well. So unfortunately, not through the direct investing, but available to everybody through individual channels.
I see. Thank you.
Of course. Appreciate the question.
Sure.
So Andrea, I see I have a question here from Andrea M.
Okay. So
the question was, for the Dominican Republic, is there a property management company that will allow owners of the condos to rent their unit to tourists, or is that something that you do? We control that centrally. That's all. We take care of all of that on your behalf. And the reason for that is we want, because we're promoting the place as a hotel, even though it's all individually owned, is that we want to maintain a certain standard and quality, customer service, make certain that rent levels are the same, and the experience is the same, because ratings impact everybody, and so we definitely want to make certain that we have that quality. So we handle all of that for you. It's a property management company that's in-house that runs all of that on for you. It's turnkey. You get to earn while you sleep.
Thank you, Noel. Thank you.
Boom. And by the way, for again, just as a reminder, in the chat, Andrea had already posted inside the chat the links for the presentations.
Yes.
So please click on that link or hit me on WhatsApp, and I will send something to you directly to 647-308-6635. And I will reach out to you directly. And she just reposted it in the chat there. So register, come on out and get a slower paced, more in-depth presentation and get your questions answered, because there's just huge opportunity here. Huge.
Yes, and I don't know if Rochelle could just put the emails for each of you, or Brendan, if you want to just type your email right into the chat. I used your Laurel Ridge email, and similarly, Austin, you can just type it in the chat. It's just so much easier if people can copy and paste them right now.
And by the way, there's no Airbnb and rental restrictions here. So We don't, all those rules and regulations that people are having to deal with.
Yeah.
Not an issue here.
And that's why you can get great cash flow.
Very. Yes.
Any other questions for Austin, Brendan, or Noel?
Just a comment, Noel, the site Andrea provided, the dates are all before November 14th. So they've all passed.
Say that again?
The dates that the registration, because you said they could register for events and the link.
They're all before November 14th.
Oh, no. There's not one for this Saturday?
No,
there's Saturday,
the 16th.
November 11th.
Oh my God. That's really strange because we had it set up. Okay. Thank you. Everybody hit me on WhatsApp and let me make sure.
Reach out to Noel, at least on the WhatsApp, to get the most.
Yeah, please. Thank you for letting me know that. My goodness. So please, I'm typing in the chat again, my WhatsApp. If you want to come out to that presentation, I will make certain that we get this to you. That's really strange.
Yeah, and Noel, if you share it with me, I can send it out with the recording that I provide to everyone so that everyone will get it. And,
Okay.
and similarly, if again, in the email and the recording of this presentation, I will provide all the contact info for Austin, Brendan, and Noel. So you'll have it all. We make sure we cover it and give you everything so you don't have to worry. You took the time and invested in coming out for you tonight, and we want to make sure that we give you the opportunity to connect with each of our partners tonight.
Yeah. And Kelly, thank you for letting me know that. That's really strange.
I didn't test it out earlier, Noel. Sorry, because
No, but I have.
Yeah.
So that's why that's why I'm a bit shocked.
Yeah.
Interesting.
I have a question for Brendan.
Yes, go ahead, Kelly. I think Brendan's
Yes.
still here.
Hi, Brendan. As you
Kelly.
know, I've also been looking to invest with you, with my family as well. So I wanted to know, would it be possible to still invest, let's say, in a few months or even in 2025? Or is the cutoff date 2024?
No, you can definitely invest in 2025. What you were asking about is our first close. We're actually, for everyone in the room, we're in the chat or in the group, I should say, we're doing our first close, and we're doing a Class A shares. And the Class A shares was giving a discount on performance fees for the fund, and also allowing the investors in the Class A shares to pre-buy units from us. We've had multiple investors ask us if they can buy the finished product because it's a cash flowing asset and they want to make their return while building the property, but also being able to execute on purchasing a property. So yeah, we will be doing, we're going to be continuing raising capital into 2025. So to answer your question, Kelly, yes, you will be able to invest in 2025. And it'll just be a different class of shares, which would be our Class B shares.
And I just wanted to say, guys, the links are there. My guy in the back end clearly did this when he was fast asleep, because the day is correct and the time, but it's just the wrong date. So you can register, and it is for this Saturday. It is in fact that, but we're going to get that updated and fixed. My apologies,
So
guys.
the link that they'll get or the completion will still lead them to the Saturday time.
That's correct.
Okay, on Saturday time in advance. Thank you. Yeah, so I
Thank you,
agree
Kelly.
with, thank you, Brendan and Kelly, for clarifying that it's not a closing that means that you're cut off after this month, right? Brendan, we're doing our first close of many.
Correct.
Yeah. Any other questions? Because we still have all three speakers before we wrap.
I have a question for Austin.
Mhm.
Hi, Austin. So I wanted to know, when it comes to investing with you, is the client responsible to decide where they're investing, or is it something that's all done on your end?
Hey, Kelly. Yeah, I appreciate the question. So when I showed that slide, we had the 3 different investment options.
Yes.
You would actually be best off meeting with myself at the company just to discuss the 3 different investment options. I would conduct what I call a suitability assessment to see which one would kind of suit your profile the best. However, when you invest into one of those options, the fund already owns a bunch of real estate assets. So you wouldn't be picking like a particular unit or a particular building. For example, with the apartment fund, that one that targets 8 to 12%, you're just investing into the fund, and then you're automatically diversified across all of the $1.2 billion worth of apartment buildings that we own. So you can pick the option you want to invest into, but the actual holdings of real estate within that option are already owned. We already have those under our control. So you wouldn't have to worry about picking individual properties or sites. You're diversified.
Okay. And within those three options, there's still distribution every single month, correct?
For 2 out of the 3 options, they offer monthly cash flow as well as an appreciation or growth component. And then for one of our options, there's no cash flow and just a big lump sum payout at the end of a project completion. So various options, depends what somebody's really looking for, but 2 with cash flow.
And Austin, is it fair to say, depending on how you invested it? I mean, a lot of my funds are registered. So RESPs, RSPs, LIRAs, those are all accumulating within my investment.
Yeah, exactly. So if you're using like an RSP, it really doesn't make sense to take cash flow because the government would penalize you for pulling it out of the RSP. So you can actually just opt for what's called a DRIP program. DRIP stands for Distribution Reinvestment Program. And it just means every month when you get paid the cash flow, it automatically reinvests back into the investment fund, which allows you to actually compound on a monthly basis. So many different options to benefit.
Yeah. Awesome. Thank you.
Thank you so much.
Thank you.
And many of you do have registered funds out there that you just don't know it's not doing anything. So, take a look at what you have, or even if you've left a lot of people that have invested with Austin that came through these presentation, they literally left a job and didn't realize that they had money that was just sitting there, or they got the accumulated value and just did nothing with it, or moved it to a bank and it's just sitting, not earning. So it's worth an exploration and to have a one-on-one meeting and find out more, right? Like Austin said, it is based on doing an assessment of who you are and what you have and what makes most sense. So like a suitability. I usually call it a know your client, right? Any other questions before we wrap? I appreciate all the questions and the interest, but we're happy to answer a few more if you have anything else. Okay, thank you. So, yeah, I think we're good. Everyone's, I don't see anything else in the chat, but do take off the information that we shared with you in the chat so that you can have some of that, from tomorrow on, you can reach out. But our goal is to get the replay with all the links to you by tomorrow. Okay. Thanks, everyone. Thanks, Noel. Thank you, Brendan and Austin.
Thank you. Thank you. Thank you. Thank you for everyone attending.
Thanks for coming out, guys. Appreciate y'all.
Yeah.
Appreciate it. Thank you.
Thank you. Time.
Yeah.
Good night, everyone.
Night.